Hello, and thank you for joining me. My name is Royal, and I've got the stock ticker symbol ANL up on my screen. Now, this was from yesterday, January 29th, and also on here I have my position summary for the stocks that I traded. You can tell I traded quite a number of stocks. I did pretty good on a few of them, pretty bad on a couple, feed being one of those. That was by far my worst loser. FEED, which actually did end up putting in a good move. I just had poor timing, poor execution on it. So again, this speaks to the benefit of trading in a simulator, staying focused on a process. But ANL made an incredible move in the after hours. So it had ran up till about almost 650. This was 653, and that was right at the market close. It stayed halted as the market closed and then proceeded to press down. Now, I thought we'd get a little bit of continuation when the unhalt occurred at the market close, so I was actually in pretty light. I had just 1,000 shares. When this pressed down really hard, I just bailed. I knew that I was, playing with it being extended. I wanted to make sure I was ready to take a quick exit. That speaks to that thought process number one, which is I assume that I'm wrong until proven otherwise. So as this essentially unhalted when the market closed and immediately moved lower, I just bailed. So I immediately bailed, took my $500 loss. So that was 50 cents a share on the 1,000 shares. And this proceeded to go down and hit a low of about 540. Well, it started to go off on the scanner again right here on this green candle as it came back up toward the 550s. I flipped back over. I saw this quick recovery of the 21 EMA and I immediately started taking my positions. So I went ahead and took multiple positions, moving up through 670 and then into the low sevens. My final ad was up here at 797. Now, I got a little bit antsy because of this big extension, and I started taking some profits up here in the 8s, 830. I think 835 was actually my best exit. And in hindsight, again, this speaks to what I'm really trying to push myself to do is that as long as this 8 period moving average is holding and I have these green candles, I'm trying to push myself to stay in longer. And I've been able to do that successfully. You saw my recap from the 28th. I actually had a $12,000 winner on a stock doing just that. I had taken my positions. I really tried to stay focused on holding as long as the 8 period moving average was holding. And then, really, what I'm looking for are these very clear topping tails. Now, you'll notice there are no topping tails. This one has a small one here, but it's really not super significant in comparison to the body of the candle. This one, however, is the tail itself is much larger than the actual body of the candle. So this just speaks to the importance of training, working on improving your process, recognizing you're not going to be perfect. But when these topping tails come in, what my goal is to set a limit order at the nearest whole dollar that we didn't break. So in this case, we didn't break and hold above 12. So I would either be setting a $12 limit order to sell or maybe even an 11.50. I don't need to catch every penny of the move, right? And that's important to recognize. You're not going to ever catch the top. But these topping tails can be an indication that it's time to take some off the table. So in this case, we didn't really have that topping tail, including this was a lighter volume selling candle, this hollow candle right here. And so in theory, I would have been looking to add to my position further. Now, I had a total of 1,500 shares. And on an $8 stock, that's a pretty decent position. I mean, it's $12,000. I do have a pattern day trader account, so 25,000 is my own cash. I have more buying power than that. But I really try to make it a point to not exceed what my own cash is when I take a position. And a lot of that's because I'm new and I'm learning and I'm having some success, but I want to make sure I don't get too far ahead of myself. And so as this broke this, so here we have the new breakout, right? It's these two candles is the new breakout to a new high. You get this pullback. This is a lighter volume selling candle, and then you would be taking immediately as this new candle breaks the high, you would be taking that. This is called first 1 minute candle to make a new high. So you'd be in at about 791, and then your stop loss would be the low of the prior candle. So your stop loss would have needed to be down about 715. So if that's too wide of a stop for you, then just take a smaller position. because you need to be able to give it some room. So ideally, if it holds this low, it's not breaking structure, and you're going to see that continuation to the upside. If it does break that low, you probably want to be out because you may be getting a deeper pullback to the 21 period moving average. So in that case, if you're used to trading 500 shares right here on an $8 stock, then take 200 shares. You're essentially trying to risk kind of the same dollar amount, um, but just in a not the same dollar amount, but you're trying to risk the appropriate cents per share just on a smaller position size so that your total risk as a dollar amount is capped and reduced. So instead of 500 risking 90 cents, which would be $450, you take 200 and risk 90 cents, that's only $180. And if it proves you right, then you can add. And that's why that third principle is so critical. You add when you're right. Because if it proves you right, then add into your position and you can move your mental stop loss up behind you. Maybe you assume break even, worst case scenario. But if you can trade that and keep that frame of mind, this gives you a great move all the way to 11. You see the topping tail come in. Okay, fine. Set a sell limit even at 11 or 1150. Again, this is the second pullback on the move. The first and second pullbacks generally work out really nicely on high momentum stocks. Your second pullback you could potentially take here as a small add, given that it is the second pullback. And again, another first 1 minute candle to make a new high right here at about 1027. But either way, you're going to be taking some off the table if you have these sell limit orders. Now, the final thing are these topping tails. So, what I have found over trading multiple years, especially the last 6 months in the simulator as well, is that you do get these topping tails that come in, and it's essentially the stock trying to push higher and then it sells down. And people buy it back up and it sells down. And they buy it up again and it sells down. Typically by the second topping tail, you should be looking to take some off the table, especially if you haven't taken anything off the table yet. You should be scaling out just to protect your profits. And what that could potentially look like is, again, this candle right here, it hits a high of 1350, but then closes below 13, which means it couldn't hold that $13 level. Okay, so either set a sell limit at 13 or set a sell limit at 1350. I'd probably be a little more conservative and set something around 13 at that whole dollar level. Now, again, you have the benefit of hindsight in this case, so it's easy to say just set it at 13. But the principle's the same. If you're going to get these topping tails and you're not breaking that whole dollar or half dollar level, just set a sell limit right there and let it start taking you out. You don't have to sell it all at once. You could sell another half position and keep half. And you could keep half assuming, okay, I'll take the rest out when I lose and close below the 8 period moving average, which in this case, this close was 1119. So you can see if I can follow that methodology, my exits around 8 would have been significantly better to hold, even if I hold it all until we close below the 8 period moving average, which puts me at an exit at about 11. So I would have captured another $3 per share, even if it's on the final portion of my trade, which would be 1,000 shares. I would have made an extra $3,000 on this, just working hard to follow that correct mentality. So if we take an extra, roughly $3,000 and add it to this, now my winning day becomes 5,200 instead of 2,200. That's 5,700 on this single trade. So you can see how following a set process like that can really give you some monumental returns by focusing in on holding while this 8 period moving average is holding. Now, one last thing, and hopefully this is helpful if you're struggling with finding consistency and getting profitable. Once you have had these really large moves, something that I've had to remind myself about is it's time for the stock to take a breather. Because in this stretch, there's going to be a first 5 minute candle to make a new high too, and that can be also a great trade. But once you've had these massive runs and your MACD starts to curl down and then close, it's probably time to be done. You just need to be hands off. You can see that once that MACD closes, which was at the 1622, so that'd be 4:22 p.m. Eastern time. Once that MACD closes, you essentially get sideways all until 17:15, so 5:15 Eastern. That's almost an hour. Now, sometimes they do go faster. You'll get the pullback and then you'll get the next leg. But more often than not, these require a continued consolidation period, and then you might get something like this for one more quick pop up. It doesn't always happen. Sometimes these come through and then they just fade. Particularly if you get below VWAP, you see them just fade out. But as this came back, it was just consolidating. I didn't take this trade at all. I did try it a couple times through here and gave back a few $100. And I had to again remind myself, okay, you've got to let this take a break and take a rest. And we can see the same thing because I'm recording this on the 30th. The trading days over today, we can see similar with PMN that happened today. Really big pump, kind of got a little curl. This is all just consolidation right here. Now your MACD is still kind of open. It's definitely not as open as it is in this space, but then you see it really close down. This is kind of the no trade zone. And then as this came back up through VWAP, I watched this and then I took this trade here at 1681. And what I was looking for was the transition from weak bear to strong bull. MACD was open, and I was looking for this 1 minute candle to make a new high after the pullback, knowing that my stop loss could be the low here at 617. And so that was the trade that I was looking to take and have an opportunity for this to move higher. And I ended up doing well on PMN today. I can show you just really quick where I ended up with PMN. So today on PMN, I ended up $2,380 trading PMN. That is January 30th. So again, I'm recording this a day late, but this is another good example of what I was referencing, which is this consolidation period. You can see when MACD is open, now MACD is a lagging indicator, so is the Squeeze Pro, which means price, of course, is always going to move first. So I treat these more as confirmation indicators and not signals to get in. What I'm looking for is the price curling back up? Are we back above VWAP? Are my 8 period and 21 period moving averages, close together? Am I getting a transition here? I'm kind of looking for all of those pieces to line up. Now, we got a topping tail here with this doji. And again, I'm referencing January 30th. We got this topping tail with this doji. I took off most of my position here, and then I had a little bit left through the rest. It was very small. But when I saw this topping tail come in, just like I gave you on the prior video or on the prior portion of this video, when you see those topping tails come in, it's time to start thinking about sizing down. This topping tail right here wasn't as concerning to me because we just opened the MACD. And again, I know my risk is less. I'm not buying up here at 18. I'm buying down here in the 1680, 17 range with a stop loss below this low, and I'm risking very little. And I also took a much smaller position. I only did 500 shares on this, and then I added as this proved me right. So at most, I had 1,000 shares, and then I ended up taking off the bulk of it up here in the 19 as we couldn't get through 20. And we actually didn't hold 19 either of these candles as well. It wasn't until this next candle. So when you see these top and tails come in, it's definitely time to be taking some off, which is what I did. And back on this consolidation note, you can see that once the MACD closes, which is right in here, 843, this essentially just moved sideways for the next 40 minutes until the market opened, and then it sold off and we just went nowhere. So I didn't take this at all. It looked like this was maybe going to set up again. Similar concept, kind of pumps up, pulls back. Possibly somebody could take a trade here, but you'd have to have been quick because it immediately then flushes. And I've just found that if this MACD is closed, especially if you're trending downward weak bull on the TTM, you got to be really cautious. If you are going to take this trade, like with the 21 EMA holding and you pop back up above the 8 here at 19, you just need to size down because this may not run like you think it's going to. And that goes back to one of those concepts that we talk about very regularly. You assume that you're wrong until proven otherwise. So if I'm going to assume that I'm wrong, I'm automatically going to take a smaller starter position. And if I am going to trade it here, rather than 500, I might only trade 200 shares. because I'm going to assume that I'm going to be wrong and that with the MACD closed and this TTM trending down, that I'm not going to get the curl that I'm looking for. So if I assume that I'm wrong and I take the entry again around the 8 EMA, then at that point, when this moves up and I get this tail, I still may be looking to take some off and ultimately have a shot at getting a little bit more opportunity, but not thinking that this is then going to rip through 20 and push us to 25. So part of that is just, again, using those principles, assume that you're wrong until proven otherwise, expect to be uncomfortable as this comes up. You can add a little bit when you're right, and then never add when you're wrong. And that will hopefully help bring you into more consistent trading, more consistent profits. That's what it's done for me. I'll pull up just really quickly a shot here of my month profits for. I'll pull up a shot of my profits on the month for January, which doesn't include this final day today, which is the 30th. But we had another great day in the market today. As I open this up and I go to my metrics, go look at my performance metrics, and I ended up 4,200 additionally again today. And so January has just been an absolutely incredible month. We'll have 4,200 there. That's 9,200 on the week. Good consistency. I'm really appreciating keeping these weeks green. That would put me up just right around $27,000 on the month of January. So if you're struggling with your consistency and you're trading in a simulator, go check out Tom Hougaard's book. Or if you're struggling with consistency with real money, go check out Tom Hougaard's book. It's called Best Loser Wins. It's an absolute must read because he talks about these processes and how to focus on those four key principles to be able to take these types of moves. There was a quote by John Carter yesterday that I came across that I really loved. If you don't know who John Carter is, he developed the Squeeze Pro, the TTM Squeeze. A phenomenal trader. He's made tens of millions of dollars in the market. Has a great trading program as well. They do options and all kinds of stuff like that. But he has a quote and it goes like this. There's no fear in the market. There's only the unknown. And you have a strategy to deal with the unknown. The strategy to deal with the unknown is a stop loss. And if you can start to, in a simulator, dial in these types of opportunities where this curls up, it's looking like it's going to try and test this prior pivot and this high of day, then you can take an entry on this pullback and you can eliminate the fear. And I still work on this as well. So this is not like a perfect thing, but you can eliminate the fear by dealing with the unknown. You don't know if it's going to go higher, but what you can do is set a stop loss at the low of the trigger candle. You can set a stop loss down, below the 21 EMA. You just have to size accordingly so that if that stop does get hit, you're out and you didn't add on the way down. And that goes back to the first principle. You should not go into these trades thinking that you're going to be right. You need to go into them assuming that you're going to be wrong, and that will help cap your losses. Look, I have my big losing days too. I have my big losing trades. The key is I work to try to cap those on a trade by trade basis, and it's still a process for me. It's a process for everybody. And as you continue to dial that in and make progress, you can now size accordingly where if that stop loss gets hit, it doesn't put you in the wrong frame of mind. You can start out in the right frame of mind by simply acknowledging that you're going to assume that you're wrong until you're proven otherwise. And then once you're proven otherwise and you're right, then add. And add a little bit. You don't have to add aggressively. If you take a 200 share starter position or even 100 shares or 10 shares, take a 10 share starter position, and as it proves you right, add 5 shares. Just get in the habit, get used to adding, even if it's 5 shares, because psychologically it starts to reinforce the right process, and you'll actually know that as you're in profit, you're going to do the right thing to add into some of that strength. And then as you see these topping tails come in, you know that you can start sizing down because the stock is telling you, hey, there's some selling pressure up here, around 1930. This is 1936. That's kind of assuming 1950. Like, hey, there's some selling pressure up here. I need to be a little bit cautious and take some off the table. and that's great. So I hope you enjoyed this recap. Again, go check out Tom Hougaard's book, Best Loser Wins. I strongly recommend it.